Inflation in the U.S. accelerated in May to its highest level in more than 3 years. According to the Bureau of Labor Statistics, consumer prices climbed at an annual rate of 4.2%. That's up 0.5% from just last month. And it's the first time that the CPI surpassed 4% since May of 2023. Let's bring in CBS News Money Watch correspondent Kelly O'Grady for more on these latest numbers. She has been talking about them all day. Kelly, that's a pretty big jump in just 1 month. What does it tell us?
It's good to be with you, Nancy. Look, what it tells us is that inflation is moving in the wrong direction, right? The Fed has a 2% target. We're now above 4%. The context here, we are nowhere near where we were in the summer of 2022. Remember, we were at 9%. But it's not the right direction. It's really driven by energy, of course, the war in Iran, spiking oil prices. That's trickling down to gas. But I did find a little bit of heart in the fact that when you strip out food and energy prices, because those things can be pretty volatile, we like to call what's left core inflation. It only rose 0.2% in the month of May, and that's actually pretty good. So it means that energy hasn't seeped into the rest of the economy yet, that inflation that we're seeing. But of course, if the war in Iran does continue on, that is the fear that it would seep into the rest of the economy.
You know, the president was asked in the Oval Office today about the inflation rate, and he said something pretty unusual. He said, "I love the inflation," and he said that the numbers are great. Is there any reason why high inflation would be a good thing?
Traditionally, when I've been in economics classes, Nancy, no, especially when the president does want lower interest rates. He might be, as I pointed out, looking at that core number, that when you strip out food and energy, the 0.2% on a monthly basis is actually pretty good. But I think sort of if I'm an American at home, I'm looking at a different data point. It's that 4.2% number that you mentioned, that headline inflation number, is higher than 3.4%. What's 3.4? That's how much wages grew over the past year. And you want your paycheck to be growing faster than the prices. It's actually the reverse right now, and that's why people are feeling crunched.
So the Federal Reserve is meeting next week to discuss interest rates. They're looking at these new inflation numbers. They are looking at pretty strong job growth for 3 months in a row. What are they going to do?
They're going to hold rates steady. I can almost say with 100% certainty, Nancy, we're getting no movement on interest rates. It's going to be a tough one for Kevin Warsh. Of course, this is his first meeting as chairman. We know that the president wants lower interest rates. This high inflation number, I think, is going to create a lot of tension in the room, not about what they do at this meeting, but about what they do at future meetings. You're going to hear some people say that maybe we should have an interest rate hike at some point.
Kelly, we saw this big market tumble just before closing today. What is driving this sudden sell-off?
So two things. There was a lot of movement in chip stocks. Remember, we've got that big SpaceX IPO on Friday. I know a lot of portfolio managers are taking some profits from some AI stocks that have done really well just to make room for SpaceX. But it's also what you mentioned at the top, those CENTCOM strikes. The president had messaged that earlier in the day that there would be some retaliation. I was looking at the market. Immediately when the president said that, you started to see a sell-off. And it just goes back to uncertainty. Investors want an end with the war, not more questions.
We really see the same kind of yo-yo action in the oil markets, right? Where the president says we're close to a deal, oil prices start to go down, then you see strikes resume, and oil prices go back up. Is there some point at which the oil markets are going to say, you know, we don't buy what any of these leaders are saying, what the Americans are saying, what the Iranians are saying? We're just going to, hunker down and prepare for long-term pain in the oil sector?
It's a really interesting question because I think you're already actually seeing a little bit of that. So I mentioned that the markets responded in a fairly visceral manner when the president made those comments earlier. I was also watching what happened with crude prices, and they did rise above 90, but it wasn't this huge jump like we've seen in the past when you've seen some of this rhetoric. And so I do think you are having a little bit of traders saying, okay, we've kind of been here before. We've seen the back and forth, but I don't think that you're going to see oil prices, unless there is some meaningful peace agreement, come back to where they were before the war for months at this point.
Kelly O'Grady, business correspondent extraordinaire. Thank you so much for breaking all of it down for us this evening. I appreciate it.